Okay, hi there, guys. Hope you can hear me loud and clear now. Sorry about the delay there. Hi, Paul. G'day, Henry. I was on kid duty today, so good. You can hear me now. Oh, picture. There we go, up and running. So bang, we just had a whole lot more in. No, all good, Paul. Hope everyone else as well had a good weekend, nice and relaxing. We've been good to see the news on yesterday. I logged in last night, had a bit of a look, and China came out with some good figures, which helped us bang up on the open. And then the US was positive, so good day so far on the ASX. It's actually gapped up on the open, pushed down to sort of close that gap from Friday, and then up she goes again. We're in the daily highs at the moment, it looks like. We'll see how it finishes today. All right, I'm going to get rid of, well, firstly, anyone that's new, welcome to Trade Setup. Let me get that there. There we go. Welcome to Trade Setup in the live stream. It's the 1st of April, so another good end to the month on Friday. Bit of window dressing, I'd say. I know Helen pointed that out on our chats on Friday, so bit of window dressing, so it'll be interesting to see how we go. I think today we'll have a bit of a chat about the overall market, the ASX. I've been a bit bearish on that, but the way it's been acting the last few days, it wouldn't go on with it. I've basically changed my tune. I'm looking for a bit of a short squeeze on the ASX, so we'll go through that. I think the Dow and that, we sent out a note on the alerts probably sometime towards the end of last week about the Dow, and it's looking, look, everyone's bearish on it. When everyone's bearish, there's enough fuel just to squeeze higher. And there's enough out there anytime they talk about China and the US coming along nicely, the trade talks, then price kicks up. So we could get a bit of a short squeeze over there as well, which you'd expect is going to drag us higher. Anything positive on China is going to be good for our market as well. So there's a bit of a fair few bullish reasons I see that it could really spike up, but we'll go through that. Anyone that's new, you can join us. You see the top left-hand corner on Twitter. It's at trade_setup. Top right is Facebook. If you're going to pick one, I'll be jumping on the Twitter. We do a lot more on that. On the bottom right-hand corner, you'll see subscribe to us at YouTube channel. So let's minimize that. Well, let's delete that, and we'll get onto the charts now. All right, I'm going to go to here. So we've got the, I don't want that one, I just like that one. This thing gets fiddly. You can see the ASX really kicking on strong now. So on there, what are we up? 51.8 points from Friday's close, and Friday's a bit of a rejection. The close on Friday, which you can see pushed up straight back down again to the close, and the close down 10 points, I think. So it's a bit, I think there's some games afoot, but it looks like it could easily, if we can hold this level above sort of this level on the close, we've got the high 62.27 on the close. I think we can easily squeeze up through this high. It's going to catch a lot of bears off guard. A lot of people that are thinking that we're going to roll over, the US too heavy, blah, blah, blah. That could easily squeeze them out. They're going to catch them off guard. People are probably easy out of the portfolio, seeing this go back up, ready to chase again. MAs are definitely pressing higher. Nothing's changed on them. You can see that this is the weekly chart. It hasn't broken that trend up yet. It has had a couple of red week here, then a positive green week, and another red week last week, and then we're off to a good start this week. It still hasn't broken any anchors. The anchor really to that trend up is down at 60.28, so it's still a few hundred points away. It could hold that, really squeeze up, and it'll be interesting to see if it can get up to, if we can get through that high, 62.70, you'd expect it's going to touch up to 63.73. The high before we get that big sell-off through October, November, December, I think it was, when it kicked off at about September. So yeah, it's interesting at the moment. I think that sort of price action, you might be staring at that daily. If you're staring at that daily, the reason why I've changed my tune a bit on it, we had this down day in red. I would have expected it to pop up and then look like it's going to roll over to lower high. Instead, we've had this continued grind up, and it's good rejection. What do we have that? That was Wednesday, was it? Friday, Thursday, Wednesday. Bit of rejection of those lows. So, through the previous red candle, pushed through it, rejected back above. So that was a good sign for the bulls. Yeah, we'll just have to sort of wait and see how it goes. I'll show you. We'll go over that. Actually, we'll just continue on. We'll look at the US in a minute. So what we'll just chat about is the overall, a few reasons why I think it's going to be bullish. Um, not It's not so much that it's going to be bullish. I mean, we never know what's going to happen, but it's to be on guard because I think not long ago I was thinking it was going to be we're going to roll over a bit, but the fact that we sort of come down and you can see this action here is sort of the reverse to this. You can see, and we'll draw that up. Actually, I'll get this on a bigger chart. So I went straight into it today. So what I want to draw is just these last 2 days. All right, got you like that. All right, so you can see this action here. Once we press down, this is back in September. We pressed down. That was really broke out of this sort of uptrending channel. We were chopping around in here, pressed out through the highs, and that was back then at that stage. If you can see, um, just this little. I'll draw a little arrow there, I guess. This little level there. What we got, that was a bit of a wash out of the previous high, and then after this solid move down, I think that started to really things probably started to break apart there or fall apart a bit there. Then we got the market did press up, which again, if you're just in that buy the dips mentality through here, um, yeah, that was a deeper dip than what you would have expected, but it was well within that channel. Probably well within that channel. Actually, if we just draw that, no, that's fair enough. Well within that channel, trending channel up. It was just a deeper correction than what we've seen in the past on your days. So you got a couple of good red days, and it really probably squeezed out a few buys, a few of these late buys, and it turned around, they chopped them back in again because the market's got to chop up and down, clean people in, clean them out, repeatedly just to get that momentum. Um, but what you saw is that break through the highs. Now, of course, you're going to get those traders who buy on the breakouts. You're going to get stopped in. They're looking for that confirmation that's broken out above the previous high. It's only intraday and it has finished below there. They could have been triggered into the market, started to buy up, and then you turn and you've got this big squeeze out. So the key level at that stage was really back down to that low. And once you got this big move down, okay, all bullish bets are off from there. And then from there, it's really just trying to assess what's happening, whether we get, our two legs, which ended up, it did play out quite nicely. Two legs, I mean, one, up, two. That's what we're always looking for, especially after this kind of powerful move down. So the market, just clean that up a bit. The market from here, you can see that the action, we were talking about this action for a while. You can see it was a bit of a choppy move up. Okay, so that kind of grindy action in the bottom third, really, of this move down is a bearish sign. Okay, very bearish sign. You've got the MA is crossed down. It's really that reversion to the mean. By reversion to the mean, we mean it's coming back up to the MAs, which are crossed down, which are negative at that sign. You've got a lot of good signs that are starting to head up. You can see that the bulls really trying to press it higher, gone from oversold to overbought at that stage. Couldn't really get it much further than probably a 40% retracement of that move down. And then we started to fall apart again. You can see a couple of red candles has really blown apart on any of these bears that were sitting in here. If they hadn't got out there, they've turned around and been squeezed out with this lower high. So at this stage, if you sold it through that low, which for whatever reason we missed, then you made that quite well. So from there, it was just really trying to assess where we're going to. And of course, when markets can go down a lot faster than they go up, bears, when they take control of fear, predominantly because the market, the ASX is biased up. It's unlike, say, you're trading, if anyone's traded currencies a lot, or if anyone's traded indices a lot, not so much indices probably, but yeah, currencies is probably a really good example. Bull moves and bear moves can be sort of equally weighted. It does chop around a bit. It is a lot harder to trade, because interest rates, the interest rate driven economic, global macroeconomics drive the FX market as well. So they can chop and change quite a bit, um, which means that on a bearish move can be just as hard as when it gets in a bullish mood. So there's a rate hike or some numbers pointing to a rate hike all of a sudden, and it's unexpected by the market can just take off. Whereas on the ASX, I think because we are predominantly biased up, there's not a lot of, you only get a few people are willing to short sell the market. So that's capping, um, I wouldn't say a down move, but it's just making those slow grind higher when everyone's chopping in, taking profits and jumping back in, and the market can just grind up. But when it turns south and fear grips everyone, everyone's bailing because pretty much most people are going to be loaded long. So there's a lot of fuel that can turn around and really drive the market lower. And a lot of the times they can really overshoot the mark. Whereas a bullish move, you sort of expect it to go from this move, you measure that move, it should go to A to B. It does. A lot of the time it does. That's your first move up. That's your retracement. And then at this stage, you're looking for that. You buy in here. You're looking for that rally. You can sort of measure that move up quite well. Whereas this, we were measuring it down somewhere around 5,900 for a measured move, and then you can see it just blasted through that and really got all the way down to 54. So you can see when fear grips, when the whole market's biased basically long, the ASX is built to, the top 200 stocks. If they're not performing, they get kicked out. So you've got performing stocks in the top 200. When they are, everything's sort of biased long, and generally people, the fear grips, rather than just a pullback where people are willing to buy into, funds are willing to buy into, when it's the unknown, and fear takes hold, yeah, they can really drive long because everyone's looking to exit the door at the same time, and no one's really willing to stand in the way. It's not, like I said, and that goes back to being even. It's just not as evenly weighted between buyers and sellers because everyone complains about sellers, short sellers, but a lot of the time they can actually be good for the market too. Probably not in this situation when fear grips, but yeah, I think especially in FX, it can contain the longs where they don't get out of hand, and it can also, they've got to buy back. So if you're shorting into the market, you've got to buy back too, which can contain the shorts, contain a move down. So it was a bit of an argument, I guess, for both sides of that, for short selling. But what we're trying to say here is really this market, once we're looking at this stage here, it's all about assessing your risk. You've got all the setups that you need, stochastics that I look at, MA, that reversion to the mean, that grind. We love to see that grinding higher, that sort of chopping up back to the MAs, and then that sudden move down, tried to pop again, and then the sellers really took hold. So if you had your sell through, if we can just clean this up a bit, let me just get all that up. So ideally, you'll sell, you're looking for that one leg, you're looking for something that's going to take that secondary leg down. Your sell through was somewhere around 60, 61.25, say, with your risk just above the lower height. That was a cracking trade. It turned out easily 2 to 1. You could have got 5, I'm guessing, if you just held it. Even if you did held it, and that was even if you held it through here and you sort of bounce all the way back up, it didn't break your anchor. If your stop was, if you move your stop down and you're locked in 2 to 1, you move your stop down to that lower high, it come up, retested, and then failed again. And then potentially you're moving it here, you're probably, technically you could have got stopped out at 5,700. So if you took it from above 60, was it 61? 6,100, what did I say, 57? That's a 400-point drop. So that was a cracker. But what I was looking, trying to explain, the key is this grind, that back up here, especially after that move there. Now what we've got, and what I see is more of the reverse now. Okay, we've had a good strong move up, and this here we've got this grind lower, washed out the lows, didn't finish below it. We retested. Sorry, there's a couple of things here. You've taken out that low at around, say, 61.25, retouched on sort of a minor, it's not really a minor level at 61, and then we've turned around and gone back up. So this is more of a grind, and you can see we didn't ever get this sort of reaction. And this is really what we would be looking for at that stage. If you think the bears are going to start taking control, it never really played. Like any sort of retracement was contained. Even this one, after it hadn't broken anything, that was relatively tame. Turn around and, after 2 down days, a rejection candle up here, a good solid down day, bang, the next day straight back up. And that was a bit of a heads up where potentially this is going to run out of steam. So yeah, that was We haven't had any real, any pullback here, any minor pullback. That was more sideways action. This pullback, the next day, it was straight started going back up again. So this is really the first decent one we had, but it was nothing like that, and it didn't take any anchor level. And really, your anchor probably would have been somewhere around 6,100 of this leg up. And if you look at your weekly, don't forget our weekly is somewhere, it's about here, 60.25. So this is your weekly anchor, if I'm not wrong. Let me just check that. Yeah, it's down here, 60.25. So that's, we've had 3 green candles up. We're sort of contracting at the moment and we're chopping around, but because we haven't broken the anchor on the weekly, I think what this move is really engineered to do, or what it's doing, is just squeezing in, and especially we've got this lower high. This lower high coming into play, you're going to get a few bearish moves, but this is why I'm always banging on how important it can be just to know where your anchors are, to know what your weekly chart's doing, to know what your daily chart's doing, what are your key levels for bearishness, what are key levels for bullishness, what should you do, how should you attack it. Now at this back here, when it first toppled over, your first sign of weakness, it did break that anchor. So it was a lot easier to see back at that stage. It broke your anchor and pretty much plowed straight through it and didn't look back. And then you got this grindy action straight back up to that breakout zone. If we can see straight through here, straight to that breakout zone, and then we got a lower high. So it was all, all guns blazing on the short side. Whereas this here, we haven't broken an anchor. We've done these 2 moves down just to clean out traders off a lower high. And what a lot of that would do, like I said, it was just going to clean out some traders, bring in some short salad, and that's enough fuel to potentially squeeze them back out on a move back up and drive the market back up and potentially drive it back up to 63.50 or thereabouts. If I can draw a straight line there, I think it's 63.50, back up to those highs, 75, say 63.75. So I think this could easily take out these highs and really drive up, really spike up. But again, it's going to come down to what the macroeconomics are saying, what's happening. China and the US keep ticking along nicely, and they start coming to some sort of compromise. Could take a while yet. But the thing is, if this does tick off on the upside and drive higher, this is your next level, which you would expect it. And if there's nothing happened in the way of trade talks, but it's still positive news flow, the market could continue to be bullish. We could see down the track a bit of buy the rumor, sell the fact. Buy the rumor, if they come out and there's actually an agreement, bang, up, down she goes again. Because now the focus will turn to global growth. And we've got problems in Europe, they're slowing, we've got Brexit problems still. The US could be at the top end of the range looking to cut rates. Now, if they do cut rates, I mean, that's probably a bullish sentiment. It's going to keep ticking along, easier money, easier debt over in the US. But we'll just have to see. We just have to really see how it goes. But I thought we'd just have a bit of a chat about this purely because I was originally bearish, and the fact that this couldn't go on with it and we didn't get a lower high that could really press lower, and you weren't seeing the MA start to tip over, that was more reversion to the mean now, and we've just taken out this previous high. So yeah, I'd be wary about, if you are long, just closing everything out, because we could continue to grind higher. Commodities are doing well today, I think. Still doing up today. Just check where we're at. Now, sectors. Yeah. So you got the metals and mining driving the market higher. So any sort of good Chinese news, anything on that front? If anyone follows copper, don't forget copper took off and has been going quite well the last few sessions. Really, really bullish moves, and it's generated, that bullishness is probably generated on the back of good news flow that keeps coming up in the way of China and the US on trade. So if that continues, and if they do come to something, you can probably expect copper to take off. Maybe metals and our mining sector is going to start really kicking on a bit more. If there's weakness into the US dollar, it's going to help commodities. So there's a few reasons why this makes sense to me. What's everyone else's thoughts? Let's get over to just where the US is and the overall markets. So here's a Dow. I mean, this is the Dow. Actually, we'll get it up on, I've got it drawn up on here, I think. Let me just see. I haven't actually. I think I did do a chart up at some stage. But you can see these levels, it's quite clear. You've got this big press up here, really bullish market. And that was back in 2018. Did that drive down? No, it was just a drive down. It's the start of the year. Okay. That was on the start of the year. Market sold off, found a bit of a base down here. We pressed up, continued to be bullish, took out the highs. And then this is where the sell-off started. And I think this was just a bit overextended, really. I think this would have been more of a sort of a washout in reverse to what we saw, back in October, September, October. A bit of a washout. But the fact that we're coming to Christmas, it was getting light on the market. It would have been a lot of people sort of taking holidays. It was just easier to start driving lower and really press down. You can see it really bounced back hard, touched in the breakout zone or that level, pull back, and then we've just had a bullish move ever since. But even if you're looking at the action on here, I'll just draw this up on this chart. I like this better. You've got this sort of, I wouldn't say consolidation, but it is for me. That's looking a bit bullish too. I mean, we don't know just yet, and it's coupled with our market, which is starting to look a bit bullish. I'm potentially just biased up on this. I think this here, this kind of move down, if you discount a lot of it because it's through the Christmas period, maybe it was a retest of those lows and it was just a nice little bounce back off. But the fact that it's gone so hard up since the start of the year, that's going to bring in the bears. They're going to be looking for a reason to sell it. They're starting to see this move down. Okay, that's probably one of the biggest moves we've had down and most consecutive days down of this leg up. And then we bounced. We've fought this higher low in here. Then we've got this lower high, and that's going to bring in the bears thinking, okay, we've got failure. We can't reach up to the high. We're starting to go back in. But if it just keeps contracting and we continue to see something like this, push up the top end, and then we get something like this, I'll be more bullish on that because I think that's enough to drag in. Buyers starting to win out. MAs are still up. Your stochastics are in a good zone as well. It's gone from overbought down to oversold on this move, back up, back down to sort of that oversold territory on this move, which built a higher low. So this is probably slightly different to what we're seeing in the ASX. It's more of just contracting in between the bulls and the bears. It's coming to that point of agreement. And if there's enough emphasis on a good trade deal for the US, I think that could kick on to the upside and really start attacking those highs. But we'll see how that goes. That's with the DAX. Sorry, that was the Dow. We've got the FTSE, which is technically still in an uptrend. Go back to the weekly. There's not much happening on that weekly. Your anchor's way down here. You'll probably see that back here. Probably that's the anchor there. Those lows of, sorry, let me just mute that. Those lows are 27.22, which is just down here, bouncing off that sort of that 27.25 zone. We're still bullish up here. It's pull back, reversion to the mean. This press up through here, go back, reversion to the mean on the daily. There's no reason why the broader market on the S&P can't just continue higher. You don't try to second guess. What we're trying to do is piece together the price action, what's happening globally, what are the factors that could turn it bearish, and if it's if we're raging bear, and there might come a time where you have to admit you're wrong, and that's by using the technicals as well. There could be a lot of factors why it could drive the market down. Now, if the market keeps going up, you've got to question why. And this market's not ready to go down just yet. We've still got those other factors like the inversion of and that's probably driven the market down. The inversion of the yield curve in the US, they're saying, okay, 9 times out of 10, probably, I don't know how many times in the last few years, anytime you get an inversion of the yield curve in the US, it's preceding a recession. Probably precedes a recession by about a year or so. So potentially this year, we've still got 3/4 of the year to go, and this market could still just keep grinding higher. US could keep attacking new highs. It doesn't mean that just because the yield curve is inverted, it doesn't technically mean it's. I think there has been a stage where it has inverted and haven't got into recession. But yeah, that's spooked the market, and the market's turned around and straight back up again. So we are making back that lost ground from that inverted yield curve. And don't forget that it can invert quite easily when there's a bit of a safe haven play. into bonds as well. But the thing is, well, if they do, look, I think Trump gets his way, and they do, was it the Fed Reserve do drop rates? It could be just what the US needs to keep driving it higher. If it keeps talking it up, lower rates. I know they've got a massive deficit, but I read a good article the other day about the US printing money. So why can't they just keep printing more and have a massive deficit, but sort of inflate the economy and continue to do that? All right. Any questions there, guys? G'day, Shirley. How are you? Uh, yeah, the XAO. I saw that, Paul. No, good work. What have we got here? I've just gone through. That's the S&P. That's still not looking too bad at all. Where we got the FTSE? See what's happening in Europe. I mean, that's has been trending higher. The same start of the year, grinding higher. Obviously, they keep getting voted down on the Brexit deal, so I wouldn't be surprised at all if they just go back to another vote. And the whole idea was to just go back in the EU. Who knows? Who knows what's going on there? But really not. What's their date? I think it's 15th of this month or so. They've got it, or the 12th of this month, where the EU's given them to take a deal or do something. They keep voting it down. They can't come up with a deal, so no one's really got any plans of what a deal could be apart from May and a few of her supporters. They may need a longer extension, or they may go back to a vote on whether they should stay or leave still. But we'll see. There's still a lot to go on what's happening over in Brexit. But it is going to contain their economy a bit, because any company, especially exporting, not knowing what they're going to do, and I think it's quite a large exporting index, a lot of the companies there. So yeah, that's going to be contained until they have more of an insight of what's going to happen with Brexit. Where do they stand in the way of new deals, all that sort of thing. So that's probably going to contain the FTSE until something happens over there. But that's still, they're getting some. They were bullish on Friday because of the news of China, trade news. So that's good. What else? We've got the DAX. DAX to me, it's just this move down has really just broken through that, and it was a key level around 11,400. And it's bounced straight back. But don't forget, we've done it prior to, the market's broken down through a key level and then turn around straight back up again. So it could just be a bit of a clean out. This was back in Feb, start of Feb. That bearish move down there took out, what was it, about 11,000, these lows in here, and the previous lows just up here. Took it down in one foul swoop over a couple of days, but then we turned around, built a high low, and up we went again. So it could be the same sort of scenario. Clean out a few late buys into the trend up. If you bought it in here, you'd be pretty happy. Your long-term view, you might have your stop sort of here, letting it ride. Especially if the US doesn't look like it's going to topple over just yet. So it could be the same scenario. Might pull back, build a higher low, and then up we go on the DAX. But yeah, these markets, the FTSE and the DAX both have been going up pretty much with the US lockstep since the start of the year. What else we got? We got the Hang Seng. That it hasn't broken any key levels just yet. I'd say your key levels down at 28,250 for that anchor to the trend up. You've had this little pullback here, washed out a few of those late buys as well. Turn around and head into new highs, or for the year anyway. Good pullback here. We could just keep grinding up. The weekly, it's, fair enough. It is getting a bit extended up here, but it can easily stay extended. Look at 2007, extended at the start of the year, extended into the end of the year, and kept sort of oscillating around the overextended mark, just keep grinding higher. Could do the same thing. So we'll just have to continue to see how it goes. That's about it. Nikkei to me is looking a tad heavier. If it breaks through this level, yeah, we expect a few sellers to come in, start to drive that market down a bit, but it could easily hold that level, bang up she goes again. Overall, the Nikkei's probably looking the worst for wear out of all the indices we just looked at, but that's not going to drive our market too much. We don't really link to that too much. Yeah, that's probably about it, guys. So yeah, that's my view on the overall market. Hope everyone's got something similar. Any shares you want to take a quick look at? BB in the US, we'll take a look at that then, Shirley. Let me just find a way to look at it. BlackBerry. Ooh. was a nice day on Friday. So we got there entry at 10:43. Is that the one? Oh, through the highs, I'm guessing. An entry at 10:43 and stop loss of 89 cents. Should take it somewhere just about 950, so below that. So you're going to enter on the push up through the highs, close on the, if it comes back down through the lows. Okay, fair enough. To me, that's not the kind of trade I would be taking, but I don't know the US either too much. This would be my original concern. What are we going to do there? That's the only concern I'd have if it fails them. If it does fail, then it doesn't really matter. You're not in. If it doesn't, it's probably going to kick on quite strong. But we'll see. Keep us up to date on that one, Sheila, if you can. And it has had a good little contraction lower off the lows there. Okay, looks like there's quite a bit. The bigger picture looks good. Oops, not that big picture. I'm guessing BlackBerry, from what I hear, are doing new things. So yeah, I guess when you go out a bit more, that could be a good little entry. You're not risking too much, and you could easily tag right up to the highs at $13. Easy. Well, that's good. I like that actually. It's not the way. It's not my typical trade. The way I would trade things, but it doesn't mean anything because US is different to our market, and they can just go on without looking back. And obviously, that was probably seems like it was news driven. What it gapped up here. Generally, news driven, you get that second day, third day play where people start to they miss that day's move. They read the news after over the weekend. They've had time to digest it. Are still bullish on it, and they could really kick on strong. Alrighty, let's get on to still a choppy market. We're just backing off from those highs. All right. What was I going to say? So we've got John, GRR. Don't mind that. It's mainly the weeklies, the one where you just got to be careful. I think I like the way you can see on this candle here on the weekly anyway. It's rejected those lows at 26. It's bounced straight back again. This could get a good flow on from news into China, commodities, all that sort of stuff. This is Grange Resources from anyone that's got this. We've got this as an alert. I like this price action. It's still quite good. I mean, we could potentially, on what I would do, we've got our stop, I think somewhere around 24. I could potentially move it up. It's only a cent, I know, but move it up to say 25 or so, purely because what I'd be looking at on this one is there's a few things. If I just go back, let me take a step back. So the weekly is looking good. You know, we've got longer term higher lows, press up, pull back, higher low, press up, pull back. If this is just a continuation, I'd like to think this is going to be a continuation, really start to extend. It's that reversion to the mean on the daily. It is holding, holding the MAs. If I would expect it to start kicking on relatively soon and start pressing higher. It is, in all honesty, it is probably struggling a little bit, which doesn't mean that it can't tick off, but you can see they have a good little run up like this, and it's followed by some choppy price action before it builds another base to launch again. Let's go back to that weekly. But all this, the difference with this type of price action and here, it was all within that high. You can see from way back in 2017. The fact that we've got through that high, if you're expecting this similar type of price action, it's had to extend, take out, say, the 23.5 level on a pullback and off a lower high, then it may not do that at all. It may just continue to go because it has taken out that. So there's going to be a bit of you would expect a bit of FOMO, fear of missing out soon, that it's going to drive it up. And, if it gets up towards that 29, gets through 29, I would expect this just to kick on quite hard. And it was a bit of a shame that we did we've got in here at 27.5, I think. It kicked on the 29, straight back down again to 26. So, but all honesty, you expect a bit of chop the way the market is at the moment. Things, those trades that just kick on hard are very hard to come by and kind of rare. You get a couple of good days, you think you're a legend, it turns around and retraces on you. We've got a couple, just as an example, CDA, we got that kicked on well and straight back down again, hitting 310. So that one there, the fact that it's kicked on and the price action on the weekly, I like that. It's just choppy still. It's struggling just to kick on in the overall environment. So you've really got to know where your stops are, where you're going to be wrong, all that sort of thing. So yeah, in saying all that, what I don't mind, we go back here, why I wouldn't be too worried about moving the stop up or tightening the risk on Grange is because in essence you've got that double top at 29. Tagged it a few times here, and it's really just pushed up, fell back below 29, closed, below 29 3 occasions. Then we got to pull back. It has got some high lows, so it is pressure in buying still, and it hasn't broken. But I figure if it goes through say 25.5, and don't forget this is a double top. A double top generally, if it can't get through, it's going to lead to a deeper pullback, and a deeper pullback could easily be back to 23.5. Could be deeper than that. Could be all the way back here, and you've got this trend, maybe right back to the 22.5. You don't know what's going to happen. So that's why I'd probably be happy to tighten that risk up a bit, because if it takes out this level at 26 without getting up through 28, yeah, I'd be happy to probably close that one out and just see, because I would expect off this double top to have a deeper correction just to clean out a few traders, because what it's done is blasted up, can't get much, that's where it stopped. Sellers come in, pressed it down, buyers are still stepping in, but then sellers come back in again at 29 and take the profit and run, especially if they bought it somewhere around 22, for instance. Good little handy game in the overall market. It's pressed up to 29, and then sellers started coming in again. So sooner or later, you're going to get a few more sellers coming in. And if they're not met with, if we're not met with buying soon to drag us up and through, then yeah, I'll probably be out just reassessing it, be happy to be out and reassessing it. But either way, that structure is still bullish to me, is still doing the right thing. It's just keeps struggling around that 28 market. Has had a couple of good days, press up to 28. If we can get through that by the end of the day, even a few cents higher would be great. But it's something definitely to keep an eye on. Let's close, minimize that. What was the next one? We got Gino, IVC, Invocare, is it? Yep. To me, this doesn't look too bad, but I don't like it in context of the overall market, what's happening. We're extended up here too. To be extended up here, just look at it quickly. We got up to these highs at say 15 bucks. We're overextended, so a lot of buying pressure to push it up there, and you can see that really accelerated. Okay, a bit of profit taken, it's pressed it down. Potentially, we're going to look to hold a higher low at around these lows at say 13. What's that, 70? Or what are they? We'll check. Lows are 13.65. Got to oversold. So that next sort of wave of buying pressure can only get it up to 14.25. So that's not, for me, is not a confident move from the bulls when we've gone from oversold to overbought. So they're pressure to push it up. It can be confident, but even if you're meeting this with the same amount of buying pressure, so think of it this way. This is the way I'd like to tune it through my head anyway. If I've got 100,000 people are willing to buy, say $1 million worth of stock, and last time they bought $1 million worth of stock for the bulls, they pressed it up and it just took off. That means there's no one in the way to sell it, as in there's no one on the offer. The offers aren't loaded to equally match that sort of $1 million worth of stock, or whatever it is, 100 grand's worth of stock, probably, or $1 million. Let's stick to $1 million. There is not that much, so it's a bit thinner on the sell side, which means if you have to buy it, bang, they've driven it up quite well. So when you got that pullback, if there's another, say $1 million that want to get in that missed that first run up, okay, this time when they've gone from oversold to overbought and they're buying up, it's met with a lot more selling, because it really can't get this same kind of kick on that it got previously back in February. All right, and it can only get up to sort of that 14.25 mark before it gets overbought. It's sort of in that overbought region. It means they've given it a good nudge. And to me, this is the way I assess it. I just look at it in pressure from buying, or you can look at it in, say, the number of bulls compared to bears. Number of buyers here, when they went sort of from this, not even oversold, but mid-range, they really got a good kick on. So there's no sellers in the way of that move. So that fear of missing out, they started chasing it up. Whereas this, there is, to me, going from oversold to overbought, there is a lot more selling in the way. The offers are stacked up, which means to me that if the bulls are given a good nudge, this could be a lower high. And also, just click back to the weekly. Yeah, we've only just gone through that 14.75 mark, and this to me is way too choppy to trade from the weekly anyway. This kind of sorry, going back a bit more. This price action got up to the highs, 18, straight back down to about not far off halving in price. Well, by the time it hit here, it was probably nearly half the price of it was at the highs. So that's a decent clean out. It really has cleaned out a lot of traders. Then we've got this bounce. Okay, so that's quite a violent reaction at the start of the year, and it's taken out this 14.75 mark. There's no reason why we can't see, if we go back to the daily, I'll draw this up, is that secondary leg lower off a lower high. So there might be time, if this is going to be good, there might be time to be, just want to check. I mean, this has gone to over, this move up on the weekly took it from oversold to overbought too. So a lot of energy used up on that move up. And on the daily, again, a lot of energy moved up. We've gone back to sort of that oversold mark. We're still coming down. There still could be quite a lot of sellers to come in. And this is what we really want to try to assess from here. Is it worth, taking on a break of 14.25, taking a buy? Personally, I don't think so. And what I'll be looking at is this. And this is a bit like the ASX. Remember, the ASX got a bit grindy. You've got move down, move up, move down, move up. So to me, if it takes out 13.75, I think this could smash down and you get another, say, equal leg down. It could go somewhere to 13, 12.75, 13 zone easily. And stochastics are in overbought. So the fact that we're running into that sort of, not a wall, but a bigger wall of sellers, because we can only get to overbought and we're nowhere near these previous highs at 15, we're falling short. If those sellers start taking control and really press it down, or the buyers who bought it, sort of anywhere 13 bucks above, maybe you don't want to give up. You've been holding it. You don't want to give up that profit, because all of a sudden you've been up quite handy from a move from 13 to 15. Then it's come back down to 13.75, and it's grinding up. It's really struggling to kick on, especially after the move. Today we're down probably over 1.5 to 2%. If you were holding it, say, from this breakout at 13, you're going to be going, look, I'm going to tighten my stop up. So this could be really, tighten your stop up below that higher low, even, at 13.75. You figure if it goes there, it's probably going to trade a lot lower back to 13. You don't know where it's going to go to from there. So tighten your stop up, lock in your gains, and call it a day, and just reassess it. It's easier reassessing with a small gain locked in from the sidelines. And then once you get more confirmation it's going to go back up again, then jump in off your high low, jump back in. But if it doesn't, this could easily, with the kind of moves we've seen, these kind of moves we've seen, down, up, we could end back down at 11.50, 11 bucks with relatively ease. So it's always, for me, it's always prudent to be on the side, you're on the side of caution. Know where your stops are, know what's going on, try to interpret that price action. If you're looking to get in, fair enough. But for me, I'll probably be standing just on the sidelines for now. All right, Darren, what do we got there? DCM. Oops, what happened there? Is this on the US? DCM. CDA. I'll go to CDA, put in the code for that. CDA, probably don't want to look at just now. Yeah, CDA is probably annoying more than anything else. And it's just thinning out on that bid side. Looking at that weekly chart, the structure's still there. But again, we've probably got that problem where the overall, there is some bearishness out there in the market. Well, let's take all that. we've got this trend here, which I still think is going to hold. And last time we've got ahead of ourselves, we've sort of gone up and then started chopping around sideways. You can see we're back here. We chopped around sideways before we started picking back up again and rallying. So we could be that we're just going to chop around sideways through below 280 and maybe up to 330. But I think we have come back down to, on the weekly anyway, we've reverted back to the mean. I think we've got our stop at around, I'll have to check that. I think it's around $3 maybe. And that you'll probably see it clearer on the daily chart. The fact that we sort of kicked off, we got in that nice little entry there, or no, it was in here off a higher low, it was looking good. Rejection of that 290 zone. You can see that press down, indecision candle, and then the next week pretty much rejected that as well. Then we kicked up, good strong finish to the week. I think it was on a few weeks ago, where we got into 330, and then bang, last 2 weeks have been a bit rubbish. So really, we could still chop around here. Ideally, what I'd like to see is that we've got that move up there, which is probably this one. We back off and just start to chop around a bit, and then get that secondary push up and see if that can get us up and through that 340 zone, which I think it could. The trend is still up on the weekly. Not too concerned about that. It's just that daily action and probably the thinness in the market. If this market can't, or if it doesn't get a bit of a head of a steam, this move down here, the MAs are still up. It's choppy, and every time we've come into that 330, we did it here, popped up through, rejected it, then we got a big sell-off. We built our base, had another go at it, rejected again up here, pullback. But pullback, the fact that we built that high low is still nice. It's a sign that there's longer term buying potential going on. And we have taken that chance. We assessed it, jumped in, and it just hasn't quite worked out for us just yet. But this could easily turn around, bang, up we go again. We just have to see. I think our stop, let me just see. CDM stop is at 299, so just below $3. So we're just below this zone in here. If we get stopped out there, yeah, there's too much weakness, and I'd rather be on the sidelines reassessing it. We'll have to see. We'll just keep an eye on that one. What was the other code there? Darren, if you're there, DCM, DMC. Is there anything DCG? There you go, perfect. Let's look at DCG then. Yeah, it's very small, isn't it? It's got enough. It's got some liquidity there. Yeah, it's nearly 20 grand on the offer. Probably another 15 to 20 below that. So you can see the offers there, and even the bids at 84 is probably about 20 to 25 grand on the bid there. It's just that you could look at next bid down is 84 and a half, then 84, then 83, 82 and a half, 82, 80, 78. So it's a bit jumpy. There's not that conviction of buyers just stacking on there and looking to buy in a pullback. But either way, down here, where are we? Let's just look at the weekly first. Okay, so this is the weekly. You can see it's coming off a potential key zone at 65. You can see touchdown here, reacted back off, another leg up, straight back down, and it's rejected that zone again, say 60 to 65 cents. Probably around 65 here. Yeah, rejected that again on the weekly. So the start of the year has brought it back up. Problem is we've just gone to that overbought territory up above 90 cents. And you can see with the stochastics, good buying pressure, bought it up. Last time we sort of got there, we were way up at 120. So what we want to see is if it can come down, pull back, and hold a higher level and get some of that selling pressure and then turn around and squeeze them back out again. So it's ideally, especially after this, I draw it up on the weekly because this is what I would be looking at on the weekly chart. I think we might have alerted this a while ago. I can never quite remember. So the longer term structure, you've got a good zone down here. All right, the market's pressed down, popped up, tried to retest it again. Buyer stepped in a bit earlier than that support zone, pressed it up, couldn't get much further, running out of buying pressure or interest. And then we've got the market really just pressed straight back down into that zone again. Now it has, what we're trying to assess now, or what you would be trying to assess, this is a major double bottom, a major buying area, and whether we get a bit of a pullback. if I can just start drawing this in blue. So that's the leg up off that's key support. We're looking at this leg down. If we can get a bit of a pullback, stochastics go back down towards oversold and then start to hold up. You get buyers starting to step in, and you get some sort of price action at a higher level, which is a good heads up that, then you can drop it down to your daily potentially for an entry level, and see if you can get that sort of price action play out, and then that will give you essentially, I'd suggest, a buying opportunity where you've got the market pressing up, you've got a key higher level starting to hold on the weekly, and when you drop it down to your daily, you get the same confirmation, and then up we go. Cheers, Paul. No worries, mate. Enjoy the rest of your day. Probably not going to go much longer, I think. What time do we kick off? Oh, no, probably about 5 or 10 minutes still. So yeah, that's what I'll be looking for on the weekly. And if we just look down to the daily to see what's happening, I don't like the fact that we've got this press up and then it rejected those highs through 92.5. And what we've done is really had a bit of a nudge up to this level around 97.5, or that dollar zone, the even dollar. The problem is we rejected that quite strongly on this, what was it, the 18th of March, rejected that. Next day, it just really didn't do anything. And then the day after that, on the 20th, bang, straight down. Down we went, and we haven't quite recovered just yet. We've got a couple of green candles in here, met by a few days later by some selling. So potentially, if this breaks down through 82.5, it could get a deeper correction. The daily's not quite looking that, because you're looking at that selling pressure right down on an ease, basically around the oversold territory. So if this level can hold, we can start to pick up. I would suggest it's probably going to find a bit more selling pressure at 90. So I'd be inclined just to hold off on this one. I mean, oh look, if we spend time holding around here, I mean, don't forget time can confirm price quite a bit. If we get some time where, just remember this chart here, this is what I'll be looking for. It doesn't mean it has to happen, because stochastics are coming down. For me, that's a good sign. If it's coming down and price is not going down, buyers are stepping in. It's plain and simple. If we get this type of thing here, let me just go back there. If we get sort of through this zone, it's holding up. It could be anywhere sort of in here, and the market's pressed up, pulled back, buyers looking good, but it's come all the way back down. It's going to be potentially, it's going to suck it in. I would suggest that it's going to suck in a few sellers. It's going to get out because they might have bought it in here, don't want to take a loss, scared of the market. And it's generally sort of your retail clients that can get, I guess, well, your weak hands, not so much retail as such, but scared out of the market or squeezed out of the market. But if it does hold up here, so we've got this move up here, that's your move down. This is our zone we're looking at. It's pressed up. It's come back down into sort of that zone. If we get a bit of choppy action where it can start, but then you're getting a bit of contraction between buyers and sellers, I think that could lead to a nice little bullish move. And that there taking a bit of time, it could be another few weeks or so, or a month, and that there, I think it's going to confirm these higher levels. And the reason why, and that weekly selling pressure is coming in, but the buying pressure, if there's buying pressure, soaking up that selling, then that's what we want to see. And if there's a few higher lows put in, and higher lows below that, what's that, 95 zone here, then I think that could be enough to really drag in some buyers and press up, potentially straight up through 95, through the dollar, and then see if we can get that continuation of that weekly chart, because it is in a good zone just there. With regards to stochastics, it's just the price action hasn't shown me anything. You can see, if we just go delete all this, get rid of all that. This is the price action. You've got this big press down, pop up, press down, still holding those minor lower highs. But it hasn't broken through any sort of major support just yet, or this 82.5 zone. If we do pop up from here, yeah, it could be one just to keep an eye on. Hope that helps, Darren. ALK, let's have a look. Oh, what happened there? ALK. Vin, how are you, mate? Yeah, I think this is, for me, this leg up's got to be ahead of itself. Fine. It's not something I really want to throw my risk at it just at the moment, because what we're trying to do is we're asking this market, when you get ahead of yourself up here, the market stretched last time was probably, something similar. We've taken out this high, but it wasn't as, the buying pressure we saw there. Last time was, right up to sort of that 40 mark. It is on the weekly thing working for it. For me is we've got a big zone through here, 20 down to probably, say 18 or so. It's touched it 1, 2, quite a few times in here. Back down here, back down here. So it's quite a few times it's touched that, and it's just starting to react back up. So the fact that it's taken out that 26 zone, I'm quite keen on. I don't mind that at all. And if you're looking at this, probably wouldn't really look at it from that high anyway. If you're looking at maybe from here, that's more of a controlled move down as opposed to this bang savage move down. I wouldn't probably discount this high. But what has happened here, it's pumped up, supports a key level up at around 40 to 42. Then we press down into lows, and the fact that this move down here is broken, I would probably be looking for some sort of pullback and a high low to buy into. I just think only because it's probably extended up here, and if it keeps going, yeah, they're the kind of things that I'm probably happy to miss out the way I trade. On the daily, look, that's well and truly extended on the way up. I wouldn't mind seeing that bit of a pullback, build your high low, especially the amount of time it's buying off that 18 cent mark, 20 cent mark. I think sooner or later it's going to have a pullback and hold a higher level. So of this leg up, if we can pull back, chop around, and hold some sort of minor higher levels, it could be around 24, 26. But if it spends some time doing that, especially the top third of this move up, then yeah, I'll be more bullish on that. And I think that's what could drive us up, especially if it sits on top of the MAs. I just think for me it's probably a bit too early, a bit too stretched. But either way, I think there's some more moves for the upside coming on that. All right, let me just check one other. This has been a favourite of a lot of traders, LYC, and this is one that we missed, which I'm still kicking myself about a lot of things. But anyway, missed it somewhere, and I think Laurent might have got into this one. If he's listening, he got into somewhere and it took a good little handy profit on that, but missed it on this big move up. And that was on the back of news. It rallied up. Next day, there's going to be some profit taken. There's always going to be some profit taken when there's, and this is what it's good to know your fundamentals, but it's also good to know what psychology is going to do. Fundamentals don't mean too much when the market's stretched. Everyone could say it's undervalued, but until you get your setup, until it's going to drag in more buyers. I mean, I don't care what the fundamentals are up here. I'm not going to buy it up here ever when this kind of market's, if you got some sort of price action like that, they could be, the fundamentals are saying it's valued at $1. Don't care. I'm looking for that pullback. I want to see some traders be sold out. I don't want to be sitting there holding something at 40 cents when potentially you got this pullback and I could buy a lot more at a lot better price, say, pull back to 27, even 30, before I start building a position into this, or start jumping into this market. So I think psychology, when the market's stretched, there's always going to be people. It doesn't matter what the market's saying to you. There's always going to be people who are going to be happy to take some profit off the table, and less people that are willing to get in at these high levels are just waiting for that pullback, because you can't lose if you don't get in. I mean, you can miss out on some profits if this does go up, but I think the mentality would be that buying it up at sort of the overextended levels off the back of some good news. Yep, they've got some good news, but don't forget they've still got to do follow through. Maybe it's a capital raising down the track. Maybe they've got cash on hand to support the drilling, and I don't even know the fundamentals behind it. I'm just assuming they had what's going on, but there could be quite a bit of time before the fundamentals start proving themselves and payday starts coming. So yeah, it's interesting. It's interesting to see on Twitter too how they talk it up. Now it's gone dead quiet, and they're talking it up because it's going up. It's as simple as that. Trying to push it as far as you can. So don't get too caught up in the Twitter spin on things. I love to look on there to see what's the hot topics and to see what those charts are telling me. And back at this, they were talking up a bit. There's a lot of people, and they had good reason to. It hadn't come out with the good news. It was looking great on the technicals. Yeah, it was a buy. probably for me, really should have been a buy through that high 23.5. Small stop at around 21, not taking a big dip, and then you've got a good payout on that. But yeah, just remember, everyone talks about something for a particular reason. They're either holding it, trying to get that continued run on, but all of a sudden it's died now. No one's saying that, oh yeah, it should be back up at 40. This could easily be, a lot higher. Longer term, it should be higher. They're doing the same thing as everyone else. They're taking some profits or looking to take some profits off the table. All right. We'll probably call it a day there, guys. I hope gone through quite a bit there. The market is still ticking up. Let's just look at the 30-minute chart. That's the 30-minute chart on the index. We've got here intraday. I'll go back to the 30-minute chart. It's looking a bit heavy up here, but no reason it can't chop around and start building again tomorrow. Could just drift lower into the close. Don't know. Yeah, but we'll see how this goes for the next few days. Whether we're right, and this daily chart does start to squeeze up, pressure up, and we might get a couple of good days. And if we get a pullback and build a high low, yeah, it'd be a lot more bullish on that, especially after these 1-2 moves down. If we do have a pullback, say to 61.75 and start holding there and get your high low, say something like this, look at this little inside level, then great. That would be, you'd probably be bullish, and that's worth having a longer term buy on the index and see if we can press up. We're really just going to target through that high up to these levels at 63.50. Anyway, we'll call it a day there, guys. Thanks very much for joining me. We're back in on Monday at 12:30. So have a great rest of the week. Kids' holidays next week, so I don't have to run around so much. And then I think towards the end of next week, we're actually going to go away for a few days. So still be doing all the alerts. We'll still do the stream, but it might from a different area. I'll just let you know if I'm going to do that stream. It'll be in 2 weeks' time. 2 weeks' time? 1, 2. Yeah, about 2 weeks' time from today. Anyway, we'll keep you informed. All right, guys, thanks for joining me. Have a great day. We'll speak to you again soon. Cheers. Bye.